The Reserve Bank of India kept the repo rate unchanged at 7.5% in its monetary policy review on Tuesday. Along market expectations, Raghuram Rajan also kept the cash reserve ratio, that is CRR, at 4%. Rajan kept policy rate unchanged, awaiting clarity on impact of unseasonal rains on food inflation, even as he wanted banks to pass on benefits of previous two rate cuts.
We have kept policy rates on status quo during this review. What we're waiting for is more information on a number of recent developments, including the effects of recent weather disturbances and possible more information on the likelihood of a reasonable monsoon.
Spelling out the credit policy, the RBI governor said the economy is showing signs of steady improvement and said growth rate in 2015-16 is expected at 7.8%, up from 7.5% in 2014-15. The retail inflation is expected to stabilize at 5 to 5.5% in current financial year. He said further rate cut will depend on effective transmission of policy stance by banks.
In terms of the incentive for banks to move, as I said earlier, the fact that credit growth has remained relatively weak so far, that there's a lot of competition building up in the markets. Markets seem perfectly willing to lend at lower rates now. And so banks over time will be forced to match the markets and will have to bring down their rates. So what we have to make sure from a regulatory perspective is the regulation is not standing in the way.
RBI Governor Raghuram Rajan said CPI inflation will remain below the target of 6% set for January 2016, hovering around 5% in the first half of 2015-16 and a little above 5.5% in the second half. On the other side, banks have reacted positively on the Reserve Bank of India's monetary statement. Speaking to media, bankers like Arundhati Bhattacharya, Chanda Kochar and Aditya Puri said that it takes time for them to decide on the aspect of interest rates at independent levels.
We only do what we believe the banking book can bear. As I told you, when the repo rates were hiked by 350 basis points in June or July of, I think, 2013, our rates didn't go up by that extent. So you have to understand, both ways. It takes a little time for the things to pass through.
If my cost goes down, there will be a cut by the amount that the cost goes down, which I'm unable to specify at this point because we haven't gone to the first step of reducing deposit rates.
I think all of us have explained, and we've said this every time when the policy is announced, even when the monetary policy rates are announced upwards or downwards, that it's not just the repo rate cut that determines, or the repo rate change that determines a base rate change. It depends on the cost of funds, it depends on your deposit mix, it depends on the liquidity situation, and it depends on the credit offtake.
RBI also announced that corporates will be allowed to issue rupee bonds following the success on this front achieved by the government-run institutions and multilateral bodies. In a significant move, RBI also said that individuals will be allowed to trade in government bonds through non-competitive bidding platform, which is available only with institutional investors at present. With inputs from Sharma from Mumbai, Business Desk, DD News.